we'll be covering important circulars as well as the audit considerations which every one of us will have to put into while conducting audit in relation to COVID-19 also. So I believe this is a very important webinar. We have got a very learned resource person today, CA.Rengarajan. Let me welcome CA.Rengarajan on behalf of Ernakulam branch to this webinar.
Thank you.
Also, let me welcome each and every one of you who are present here today to this seminar, particularly Secretary Raju, Jos, and every one of you present here today. I have a few points for your important attention. Number one, this is a CP seminar. You will be getting unstructured CPE credits, 2 hours CPE credits if you attend till the end of this session. That's one thing, you have to log into CPE portal and claim your CPE credits. The second thing, till the end, please see that you keep audio muted. If at all you want to raise any questions or if you want to talk, you can raise it in the chat box separately and it will be taken up appropriately at the right time. Please see that you keep your audio muted till the end of the session. And also audio, I need not, video, I need not mention about it because sometimes we move about or we may be having something or we may be talking to somebody else without putting the video off. Everyone will be able to see what you are doing in the video. So please see that if you are doing anything or if you're going out or moving around or if you're having anything, keep the video also off. Let the audio coming in and you can hear it also. These 2 or 3 points I think you have to take care of. And I wish you will have a wonderful time here today along with Rengarajan. Over to Jos for the formal introduction of Rengarajan. Jos.
Thank you, Chairman. Today's speaker, CA.Rengarajan, does not require any special introduction among all of us. However, he is qualified accounting professional having 9 years of experience in finance and accounts, auditing and taxation. Presently, he is a partner in Surya & Company Chartered Accountants. He is a faculty at our branch as well as ICAI in Kochi. He is always, taking many subjects like Companies Act is, I think, his favorite. Then international taxation, income tax, GST, FEMA in our institute as well as ICAI branches all over Kerala. So with these words, I introduce before you today's speaker, CA.Rengarajan. Over to you, sir.
Thank you, sir. Good afternoon to one and all present here. I can see a few people on Zoom. I'm told many people are watching on YouTube also. This is my first webinar taking a session, so it's going to be a new experience for me also. I think I should thank Roy sir and the whole team for giving me an opportunity to present my first webinar CPE session. I think Ernakulam chapter has always been a support for me. Now I'm still having butterflies in my stomach because I took my first study circle in Ernakulam chapter. I took my first CPE session here. I'm having the same excitement right now, taking my first webinar also for Ernakulam chapter because it's a new experience. When you are listening in a webinar, you are pointed to one screen, the speaker screen alone. Now in front of me, I can see so many people, so many videos active and all. So it's going to be a different experience for me to share or view and talk to all of you. Definitely, it's a different experience when we are making a public speak, when people are sitting right across and talking, looking at them and talking to them, and knowing people and addressing them is different experience. This also is a new experience for me, and I think I'm going to enjoy this right now. So welcome to the session today. What I have planned for is, is the screen visible for everyone? Yeah. Okay.
Yes.
Okay. So today we have assembled, or we have gathered to discuss on updates on Companies Act and the Companies Amendment Bill 2020. All of us have had a hectic week, definitely, with the bank audits, which was allotted within a very short span of time, accepting the bank audit within a very short span of time, and forced to complete it much more shorter span of time. So with all those timelines and how we have been looking at audits, I think we are learning to become more prominent by using system as an very effective tool of audits. Many people still use basics of tally and other things for auditing, and it was becoming difficult for us to get the information. We went to the client's place, sat with them, discussed the activity. But this year is not going to be that way. Financial year 2020 audit most probably must be work from home for many of us. It may be in that scenario. We have already been through 3 lockdowns. Prime Minister in the last speech, he has also indicated that there's going to be a lockdown 4. We don't know how many such lockdowns are going to come. Obviously, listed entities, they've geared up. They have to have their public financials presented by 30th of June. They have to come out with their publications. SEBI had extended the time frame, so they are also in a very strict timeline right now. And looking at how SEBI had projected, saying that auditors of listed companies should also be considered as essential service. That's how it's been framed right now. So all of us are somewhere or other, we will be doing some essential service so that we can cover the audits, ensure all the compliances are taken care. So to ensure that the audits are completed, we must obviously know what are all the amendments which has happened. I am covering 4 main areas today. The first area which we'll be looking at is what are all the major amendments which came in during the financial year 1920, including Companies Amendment Act 2019. That covers a significant part of what we have to do. Then obviously, since COVID has come in, so many things have changed. Obviously, Finance Minister has come up with so many options of exemptions which was given for COVID-19. So we'll look at what are all the exemptions which are there. You can, we will look at what are all the exemptions which are available for COVID 2019 relating to MCA or ROC activity. Then we'll also look at what ICAI has mentioned in terms of how or what are the areas which we need to look at. Auditing under COVID scenario is going to be a challenge. We have to gear up to ensure that all our compliances are taken care. Just because there's a pandemic, we should not say that we are not able to do the audits to the fullest extent, or we may not be able to give how we have to present our audit report. All this will have to be looked into. I think ICAI came up with a 49-page or 50-page note somewhere towards the end of March itself. So I'll be covering some activities from that notification also, or from that publication also. And the last part obviously is on the Companies Amendment Bill. 2020, which is again has some significant changes. We'll look at what are all such changes and how to address it. So we'll go into the session. Updates on Companies Act. So the first update which came in because of Companies Amendment Act 2019, or the major amendment which came in Companies Amendment Act 2019, was pertaining to corporate social responsibility, CSR payments. So we all know that entities who are liable for CSR has to spend 2% of the average profits. Now, this average profits, there was a confusion as to how to take if it is a newly incorporated company. For existing company which has already been there for quite some time, then there was not much of a challenge. But for newly incorporated companies, how we have to look at the 3 years data was something which was confusing. So Companies Act 2019 came up with an amendment saying that if you are an entity which has just commenced, and obviously you have satisfied any one of the conditions by which CSR is applicable to you, then you need not look at the average of the 3 years profits. You can take the 2% of the immediately preceding year's profits and spend that value towards CSR. Was one of the amendments which came in. That is affecting some small newly incorporated companies alone. But the remaining 2 amendments which came in Companies Amendment Act has a significant impact on many entities, many corporate entities who are liable for CSR. So what are those 2 amendments? The first amendment said, if you are doing an ongoing project, if there is an ongoing project for which you are spending as a CSR activity, then, and the ongoing project is not able to be completed, then they have given you a time frame to deposit the money which the CSR committee has determined for that particular project, and ensure that the activity is completed within a span of 3 years. For example, let's assume company A, they have entered into an agreement with a hospital. Let's assume it's an eye hospital, and they are going to do something like an free cataract surgeries for people. And that cataract surgery is going to be funded by the company. That's their CSR project. One of the CSR project is that. So the hospital has said, we will do, say, probably around 10,000 or 5,000 surgeries in next 5 years or 3 years. For that, you can sponsor us. So that being the case, there is a commitment from the hospital as well as there's a commitment from the company to ensure that this project is completely going to be funded by this company A. So now, earlier, before this amendment came in, whatever was the money which was spent exclusively in that year for that project was charged off as CSR expenditure. What was proposed to be spent and other things, nothing was done to it. Now the act says, if it's an ongoing project, you know that the project and it's going to take time, then you must ensure that the money is spent, and you have to keep the money in a separate bank account and spend it for that purpose, and the time frame available to spend for that purpose is 3 years. Just in case you're not able to meet the number within 3 years, you're not able to spend that cost within 3 years, immediately after the 3 years, you have to spend it within a span of 30 days to the chapter schedule 7 classified items at the earliest. That's how the act has been changed. So this is the primary change which has come in. The next change which has come in is with regards to the unspent value. Okay, again, this is a very, very crucial amendment according to me for companies who are looking at CSR as an expenditure. earlier when CSR came in, there was a guidance note issued by ICAI, which very clearly said we cannot create any provisions for the purpose of CSR. CSR should be an actual expenditure incurred. That's how it had termed. Okay, now Companies Amendment Act 2019 changed or introduced a provision by which it says any unspent money should be transferred to a specific fund which is approved under Schedule 7 within a period of 6 months from the end of the financial year. This is how the wordings go. So now this becomes a very crucial point for discussion. Now, does it mean that as on 31st of March, if an entity is supposed to spend 100 crores towards CSR, they have spent only say 95 crores. Earlier in the board report, they could say reason for why they have not spent that 5 crores as an activity. Now they are forced to spend that 5 crores within a span of 6 months from the end of the financial year. So does it mean that the company should create a provision and ensure that the compliance happens within the next 6 months? Or should we look at it as an unspent amount of the previous year to be spent mandatorily in the next year within a period of 6 months is something which we have to look into. So logically, going with the wordings that has been said, it looks like we may have to look at provisioning the differential value and ensuring compliance of that differential value within a period of 6 months. So already we are in the second half. If the companies have not complied with CSR activity for whatever be the reason, including COVID, then we may have to look at whether they are creating provisions, whether they have identified the sources where they're going to spend or the projects where they're going to spend, how the spending is going to happen, what the CSR committee has determined, what are the steps taken by the company. All this will be factors that we may have to consider before determining how the second half of the expenditure or the unspent amount of expenditure is to be addressed. So this is something that we may have to look into. So this is one of the significant amendments which came in. The other amendment in CSR itself which came in was with regards to penalty. I don't understand why and how they introduced this penalty. And again, I think the finance minister has understood that it was a mistake. In CAB 2020, they have tried to propose an amendment for this also. Okay, as of now, how the section reads is that if an entity has not spent the money, then the company will be liable for a penalty of 50,000, which may extend up to 25 lakhs. Every officer of the company who is liable would be imprisoned up to 3 years, will be charged 50,000 and can go up to 5 lakhs as penalty. This impact came in as a shock to many people because in most of the organizations where independent directors are there, obviously CSR committee had independent directors in it. And if the unspent value is won by the company, then the CSR committee, the independent director will be forced to have this impact. So already identifying an independent director was a challenge. With more such regulations posing a lot of implications, identifying more penalty prosecution on independent directors has created a huge impact on independent directors as such. So that being the case, when we attended board meetings, the first question that the independent directors asked was, should I take some other precautions now that this, even including CSR, I'm going to be penalized? Should I take more precautions now is something that they came up with. So that being the case, yes, That's how the section has been worded as of now. Once Companies Amendment Act comes in, we will be able to look at the other activity. Next amendment which came in CSR again was that it said that central government can step in and give specific directions to any class of company or any company as to how they have to spend the expenditure. Again, this is something which was not expected. Probably I foresee something like they'll say public sector companies or banks should incur more expenditure towards central government oriented funds or PM cares, or they should spend more towards PM care or Prime Minister Relief Fund. They could give indications that way. As of now, there is no notification or there's no specific amendment or any such directions in these lines. But central government has made an amendment saying that it can step in and direct when or direct to which companies how the expenditure has to go about. So that is another significant amendment which came in. As of now, we are not clear as to who all it's applicable. The notification still not come, but once it comes, we'll know about it. Yeah. So moving on from CSR, other major amendments in Companies Amendment Act 2019 was with regards to shifting of powers from tribunal to central government. Earlier, if an entity had to change their financial year, okay, there were possibilities to change a financial year. Example, I'm a subsidiary company, the parent is situated in US. They are asking us to convert their our financial year to merge with their financial year. Then I had a permission, I needed a permission from the tribunal to change my calendar year, change my financial year to Jan to December. That power has now been shifted from tribunal to central government. Similarly, if I have to convert myself from a public to a private limited company, earlier what was with the NCLT has now gone to the central government. So that is something which has come up additionally. The other amendment was when it comes to section 164 of Companies Act, wherein it said that if an entity, if a director has not complied with his limits of number of directorships, which is mentioned in section 165, then he can be disqualified. Earlier, it was not a disqualification, it was only an noting that has to happen, and how we have to address it was a completely different task. But now it is very clear, section 164 has been amended to state that any such change will lead to disqualification of directors. So that is something which came up. The next amendment was with regards to revised timelines on charges. Now, if you read the section is worded in such a way saying that if the charge has to be created prior to Companies Amendment Act 2019, then this is your timeline. If it is after Companies Amendment Act 2019, then this is your timeline. So they are very clearly distinguished as to what charge, when it came in, and what should be the timeline. So that's how they have distinguished, and all this came in as an amendments. And the major amendment in Companies Act 2019 was recategorization of a lot of fines to penalty, which was again another step taken by the central government. I think even in CAP 2020, many such items have come in, very favorable judgments have come in. It is going to be beneficial in many cases. Instead of having a range of penalty, having range of fine, we will have a specified penalty now. It's been very clearly identified right now. So a lot of sections have been changed to that extent. Similarly, MGT 14 penalties were revised. 117 was revised to that extent. There were timelines which has been revised, because of which penalty also has been revised. These are all some major changes because of Companies Amendment Act 2019. Okay, so moving further, next few slides we look at what are all the other. I'm just picking out some of the important notifications, circulars which came in, which we may have to have a look into before we complete or close down our audit. First of those amendments was, it said that if any entity is liable to appoint an independent director, then in the board report for the current year, the board of directors have to give an opinion on the integrity, expertise of the newly appointed independent director. Okay, so since Companies Act 2013 came into picture, and after SEBI regulations have been changing, we all know that there is a rotation which is needed for an independent directors also. So now that also comes into picture. So, and now definitely 5 years have passed after Companies Act 2013 came into picture. There could be independent directors who are stepping out, new directors who are coming in. Identifying the director was a challenge. Now the board also has to justify the person they are identified as an independent director. So it's going to be a. Is anyone asking questions? So it's going to be a very difficult job for the companies to identify more independent directors with such restrictions coming in. For example, earlier an independent director could be a person who was known but had but because of his independence was able to be appointed as independent director. We could just take him onto the board. Now the SEBI had said there are going to be exams which has to be conducted. So independent directors have already started feeling the pinch of how to start gearing up for examination. Furthermore, the board now has to justify why this person is suitable for the organization as independent director. Okay. So for example, I'm in a software company. If I'm picking up a person who's an independent director and his range of expertise was agriculture, then justifying why he is an independent director in my company will be a huge challenge. Okay, if it's an ex-banker, then we can say yes, he already has an experience. Or if it's a chartered accountant, he can say yes, he has an experience in so and so field, and hence he'll be helpful or he'll be guiding us in these lines. Other people other than that, we will have to face, the directors have to face a challenge on how to identify these independent directors and how to fit within the terminology called their experience, and the expertise will fit for the company to take them forward as independent directors. So this is also going to be a challenge. So that is one of the amendments which came in. So we must all be aware that board report will include one more line. One favorable thing which came up from MCA's point of view was that it said that independent directors and non-executive directors should not be tagged on for criminal or civil proceedings unless and otherwise there is a sufficient evidence against them. So very, very logically thought out observation which came out from MCA's point of view was in these lines. As I told you, including CSR, now the responsibility was on the independent director, and they could be penalized, they could be imprisoned, means then the responsibility what they are going to take would be a very, very high responsibility, and they were all thinking at what are all the precautions they have to take. So now Companies Act has come out with a very good amendment or a notification wherein it very specifically says that civil and criminal proceedings will be taken up only when there is sufficient evidence. And it does not stop there. It also explains, saying that the ROC will be having a SOP, a standard operating procedure, and he has to satisfy the standard operating procedure in order to determine the liability on the independent director and non-executive director. So this SOP will be framed by MCA. So that being the case, the MCA amendment is very, very favorable in this regards, wherein the responsibility of independent directors is just to establish that they were not involved in any fraud or any other activity which has happened. Yeah. The next few amendments which came in is, we all know that secretarial audit has been made mandatory even for private limited companies. Any entity who has borrowed more than 100 crores from a bank or a public financial institution now is liable to have a secretarial audit. 1,000 crores is not such a huge value. So private limited companies who are into exports and other things may easily breach this value as an outstanding value. So if they are covered under this category, then they will be subject to secretarial audits also. So that is something which came up in the same notification. They also said that private companies, if the paid up share capital, one second. Okay, sorry, I didn't know where the laptop charger was. Yeah. So going again, charge only. I'll take it next. So we have to look at the requirements of the independent directors here, and the benefit has been given. I'm sorry, coming to the company secretary's requirement has been given, wherein it states that we have to ensure that company secretaries are appointed in terms of an organization which a paid up share capital of more than 10 crores. Sorry. So other amendment which came in.
Sir, what about public companies, sir? What is the limit?
There's no, now they've not, earlier the limit was there of 5 crores. Now they have changed it to say every other company and private limited company more than 10 crores. So now public limited company, I think the 5 crore limit is still there. Now the wordings say private limited, private companies with paid up share capital of more than 10 crores is what they have changed right now. Am I clear? Okay. So the next amendment which came in was the disaster management relief and rehabilitation restructure was included as part of Schedule 7, and it's applicable as a CSR activity. Again, it was a very important amendment which came in, and we will talk about it when it comes to COVID activities also. The other significant amendment which came in is under Section 188 of Companies Act. Section 188 now states that for certain transactions, the threshold limits has been changed. Earlier, the threshold limits was a percentage plus a value, whichever was lower. That's how they had termed earlier, Rule 15. Now they have removed all the ad hoc values. The numerical values have been removed. Now only percentages remain. For example, now the board may have to take an ordinary resolution if there is a sale or purchase of transactions between related party, if that value exceeds 10% of the total turnover of the company. So that's how it's worded. Earlier it was 10% of the total turnover of the company or 100 crores whichever was lower. That's how it was worded. Now they have removed of 100 crores. Now they said 10% of the total turnover of the company. This is how it's been worded. So like this for other three other like selling or for property, monetary limits. Now only percentages have been kept. So this is the other change when it came in Companies Act 2013 amendments which came in last year. Going into COVID related, obviously so many benefits has been discussed by the finance minister. We have had 2 sessions with finance minister already. I'm told the 3rd session is today. Yesterday we had 1 session, today another session is going to come. So what are all the benefits relating to Companies Act? We'll look into. First benefit or first exemption or first relief that was granted is that the time limit between 2 board meetings was 120 days, has now been extended to 180 days. So you have been given additional 60 days time to conduct the board meeting. So generally we look at 4 board meetings in a year, and the maximum time gap between 2 board meetings should be 120 days. That's how we look at the numbers. Now for the last quarter, March, as well as the next quarter, which is June, we can look at 180 days instead of 120 days. That's how it has been worded. Many of the entities planned or had plans of conducting the last meeting towards March or towards the end of March, whatever be the structure. Because of COVID, people were not able to travel. They were not able to quickly organize for video conferencing. Those kind of difficulties came in. So they were forcing themselves to complete only 3 meetings in a year. Now they have time. They have time for another 15 days now. They can still plan and complete to close down all the meetings for the last quarter for financial year ended 1920 and have a meeting between 180 days. So that has come up. Additional 60 days came up. Similarly, for June meeting also, we can take up additional 60 days. That's no issue. The next thing is there are a lot of indications which has already been there. Companies Act 2013, when it came up itself, it came up with an option for having video conferencing as a methodology. Now again, there is a very strong emphasis which has been made saying that quarter-ended March and quarter-ended June, the board meetings can be through video conferencing. Any decisions can be taken through video conferencing as long as we have complied with the do's and don'ts with regards to video conferencing. So that has been let open. So every entity, I think, will look into video conferencing only. Most of the entities who are planning to have board meetings, many listed entities were planning to have board meetings and all, are forcing themselves to have a video conferencing meeting right now because many directors are unable to travel or there is a difficulty in kind of commuting. Even if they are within the same place, difficulty in commuting is there. So much of difficulties being there because of COVID 2019. They have said, go ahead, do video conferencing. Ensure that the March and June quarters, you complete video conferencing as a method for completing your board meetings. One more amendment or relief which came in is with relating to the independent directors meeting. Every company which is liable to have independent directors is supposed to have at least one independent directors meeting in a year. They can have any number, but at least one independent directors meeting should be there. What is this independent directors meeting? Is in that directors, only the independent directors, in that meeting, only the independent directors will be present and they will be discussing on the issues which they have faced so far. They have an option to call the internal auditors. They have an option to call the statutory auditors, discuss if they have faced any difficulty in audit, whether they want to point out any serious issues, internal financial control, internal control issues to the board, to the independent directors, which they had to escalate out. This was a very important board meeting. And major companies or majority of the companies always planned an independent directors meeting towards the end of the year for a very logical point, saying that by then the auditors would have completed, or internal auditors would have completed one whole year of audit. Any issues they have come, they will be able to discuss. 3 board meetings would have already happened, and the 4th meeting would have happened or is going to happen. So they know more facts and numbers on and what has actually happened in the organization. So it becomes much more easier for them to discuss in the independent directors meeting. So now, since there is no possibility for people to travel for an independent directors meeting, even if you are not conducting an independent directors meeting, it will not be considered as a violation, is what they have said. They have not said conduct a video conferencing for this. They have said if you are not able to conduct also, it will not be considered as a violation of Companies Act 2013, is what they have emphasized. So this is again another significant amendment or a relief which was coming in. The 4th point in the slide, the biggest relief to all auditors is CA.R 2020 has been deferred by 1 year. It's applicable only for financial year, from financial year 2021 now. As usual, towards the end of the year, the ministry came up with a notification saying that there is a new CA.R, Companies Audit Report Order 2020, and they say it's applicable immediately. The numbers of clauses had gone up, additional responsibility had come into the auditor's hand. We had to start disclosing on what the internal auditor did, what are all the important activity, how we have considered. All this had to be put as a factual report in the internal audit in CA.R 2020 and all came up. So we were all confused, and once the first COVID relief measure was announced by the finance minister, and she said CA.R is pushed by 1 year. The first comment I received from my senior partner was, we have spent last 1.5 weeks trying to decide how to make our audit program, how to change our audit plan to ensure we will comply with it. Now that 1.5 weeks manpower is lost. So we are all gearing up to the change which was proposed, but all said and done, that has been deferred. So we get time now to communicate to our clients, saying that what are all the needs as per the new change, how they have to give us documentation to ensure that we are reporting the facts under CA.R 2020. So CA.R 2020 has been deferred to financial year 2021. The other relief which has been mentioned, like all other forms, all MCA forms also has been, I won't say deferred, they have said there will not be any additional fees which will be liable because of the delay which is to be filed. This relief is from 1st of April to 30th of September. So people can use this option to file all the backdated forms to ensure that there's no additional fees which is coming in. That is again a relief which was introduced. The next relief is predominantly for entities who have taken public money in terms of public deposits or debentures, be the nature. As per Companies Act, as per the corresponding sections, there is a deposit which has to be created by the end of 30th of April. 10% of the value of the total value has to be created as deposits. Now, since COVID came into picture, creation of deposit will be difficult. So now that has been enhanced, the time limit has been enhanced. This has been deferred from 30th of April to 30th of June. We get 2 more months to ensure the compliance under this particular, under these particular sections. The other bigger challenge which all of us especially where there are private limited companies and NRIs are directors and they keep traveling, is monitoring the 182 days timeline. Whether they were, at least the act requires at least one director should be present for at least 182 days in a year. That is the mandatory requirement. So if there are two NRIs, both have started a company in India and both frequently travel, especially if it's a software company, they themselves go to a foreign, sit with the customer, try to sort out the issue, try to implement the program and then come back and all. Managing this 182 days was a challenge for all of us. So now they have relaxed this timeline. They have said if a director is not able to meet this 182 days in the current financial year, then we will not look at it as a serious violation. We can still consider him as a director and we'll go ahead. There won't be an impact on the company is what they have told. The other relief which came in is with regards to filing of Form 10A. This is a form which has to be filed for newly incorporated companies. Now the timeline has been shifted. You can file the Form 10A till 30th of September right now. So there's no substantial timeline which has been introduced for that. The other COVID-related exemptions or reliefs which came in, I think which will happen predominantly this year, is conducting the AGM. AGMs can be conducted through video conferencing or any other method of audio video methods is what they have told. They have given us the procedures in terms of an entity who is liable for e-voting, for an entity who is not liable for e-voting, what are all the do's and don'ts and how to conduct it, they have already given. And this is already there earlier, and they have emphasized that in COVID 2019 situations, I think we'll be looking at this as a very important option, especially where bigger organizations, where we are unable to pull in people into one space for the purpose of AGM. I think video conferencing will be the way out. We'll have to look at the do's and don'ts and try to comply with it. The other thing is actually not an COVID related, the second point here is not actually a COVID related measure, but all said and done, I put it here. For every entity who was having or who are closing their financial year by 31st of December, for them conducting the AGM, there was a bit of a confusion as to what is the timeline before which they have to conduct. Now there's a clarification which says that by 30th of September, you also can conduct your AGMs. That is a clarificatory nature which came in. The next two amendments came in because in CSR, first amendment is any amount spent for the purpose of COVID-19 activity will be considered as a CSR activity. That means to say, if the organization bought masks and distributed it in the area where factory is situated to public, in the place where factory is situated or office is situated, or it had taken steps to fumigate the place or whatever be the structure, all those kind of expenditures will be considered as a CSR expenditure is what they have come out with. Similarly, we all know how PM Cares came in, how PM Cares and how CM did not care, all those confusion, why only PM Cares, why CM is not carrying, all those confusions relating to the name. PM Cares is also considered as an CSR project as per Schedule 7. So any amount given towards PM Care will be considered as a CSR expenditure is what they have mentioned. Then there was an FAQ which came out which addressed a lot of questions. One question which many people asked is, now I have no office, but I'm still paying salary. Is salary considered CSR expenditure? Was some doubts which people had. And again, I think throughout all the meetings that PM has spoken or FM has spoken, they were very, very clear saying that there should not be any people who are sent out. There should not be any closure. You should not be without paying salary. All those things came in. So whether that salary wherein they have not worked but I'm still paying them a salary, whether there is a CSR expenditure, answer is no. They have said it's an obligation on your part. It's not considered as a CSR expenditure. But if there are any temporary or casual workers and you're paying some value over and above their normal wage, that value can be considered as ex gratia, which is eligible for the purpose of CSR. That's how they have worded right now. Say, for example, a migrant worker is working with us and he generally gets 10,000 as fixed package, and there is additional 7,500 which is paid to him for the overtime that he does or for the other compliances that he does in the office. Now, he is not given this additional 7,500 because he has no overtime during the month of April. But the company feels they want to pay that additional 7,500 to him. That value is being paid as an ex gratia to that employee, that migrant employee, who is a temporary or a casual worker. Then that 7,500 would be considered as a CSR activity, as CSR expenditure, is what the FAQ says. Okay, so again, something which came up, which again will have a very significant impact, especially in a present scenario where migrants are moving from one place to another. If companies are taking steps to ensure that they retain those migrants in possible damages that they're doing to themselves by walking through or cycling through or sleeping on the tracks and other issues like that, it's going to be considered as a CSR activity for the company. So this is another amendment which came in, another FAQ which came in. Again, one more specific notification which came in with regards to IEPF contribution forms to be filed. Again, that has been deferred to 30th September. We earlier saw that all forms has been deferred by 3 months. This also has been deferred by another 6 months effectively. It's gone to 30th of September. We can file those corresponding forms, IEPF 1, 2, 3, 4 and all. We can file it before 30th of September and it will not be considered as a violation is what this notification says. So these are all some of the reliefs which came in. Now we are going to look at certain things which are needed for audit for all of us. For me, bank audit 2020 was a new experience. Why? Because I didn't visit the branch that I was supposed to go. I visited my nearest branch through CBS. I could access the data, started doing my analysis of the accounts there, asked them to scan, send so many information. Based on that, we closed down some audits, took some disclosures, took some disclaimers, and mentioned that to the standard statutory auditor. But all said and done, that was a different experience. Going forward, again, we are going to face similar requirements here also, especially where if the situations are not relaxed, the COVID situations are not relaxed and our client is say in a different district or a different state and we are not able to visit them for the purpose of audit, how do we close down the audit? What are all the things that we have to be careful? All this is going to be a huge challenge for us as auditors, especially for corporate entities for the financial year 2020. So looking at what the guidance that ICAI has given, we may have to look at certain key indicators to satisfy that COVID impact has been duly considered or duly disclosed in the financial statements, by which our responsibility is mitigated to that extent. Okay, so that is where the challenge of audit 2020 is going to be for all of us. We may have to sit at our offices. People may have to just send the dump, general ledger dump or the tally backups and other things to our office. We may have to sit at our office, probably ask for samples, get the samples scanned, uploaded if things are not relaxed. I mean, by the time we are doing the audits, all this is going to be a challenge. So, and especially if you have to travel from one state to another, I don't foresee any possibility in the next 1 or 2 months to happen. Most of the states have said, don't send people to our states. Even if it's migrants, don't send people through trains is what they are claiming. So that being the way, we may not have an opportunity to go to the client's place to visit, to do the audits. So what are all the challenges that we may have to do? So one, I have just culled out some important points that we may have to look into. The first point that I have mentioned is there any disturbance in the supply chain that could impact the cost, like delays or inability for the products and source products and other things? This is very, very crucial. For example, if I am a manufacturer of a product and my supplier, let's assume, is sitting in Maharashtra. My sole supplier is sitting in Maharashtra and I get material from him. I am not manufacturing an essential goods, but for some reason, I am making a compound which is, say, perishable, or which may get dissolved, or which may get lapsed within a short span of time. So my raw material or my WIP as on 31st of March would have to be revisited, whether that is possible to be used, whether the company will be able to source the same raw material from a supplier nearby, whether it will affect the product mix of their entity, or if the products will be able to be supplied from Maharashtra to us. All these confusions will be there. How is the management foreseeing that this disturbance is not going to affect them in a drastic way? Okay. Or if I am a person who is dependent on some major imports, or out of the raw material or components which is needed for my manufacture, one primary item has to come from China. Let's assume that way. Okay. And let's assume that as of now, any Chinese product is not allowed to step into India. How are they looking at this scenario? How will it affect their produce? How will it affect their product? How they are looking at this scenario is one very crucial information that we may need to look into. Going with this, we may also need to look at if there are any agreements which is entered into with customers, which may have a penal clause in it, which will affect the organization. For example, I'm supposed to manufacture, deliver the goods within a span of 30 days from the date of placing of order, or within a span of 60 days from the date of placing an order. If it is not done, I am liable for a liquidated damage to the customer of, say, 5% of the value of the goods. Or it could be something like I might be penalized with 1% of interest cost per month I delay. These kind of scenarios will come in. It are there in many contracts. If such contracts are already there, then have the management already spoken with the customers, checking with them whether this clause is going to be considered as kept at abeyance till COVID 2019, or the lockdown is relaxed, or the customer is very, very rigid, saying that no, come what may, you have to deliver this. If not, these penal things has to be taken care. All this have to be looked into. If such losses are already there for the year under March 2020, because of lockdown or delays which is already foreseen, then we may have to look at creating a provision. If it is there subsequently, what could be the contingent liabilities? All this have to be analyzed. So this also becomes a very, very crucial factor. Similarly, loans taken with financial or non-financial items. What is the current situation? Obviously, RBI has now come up with moratorium periods, saying that next 3 months, even if you don't pay your EMI, it will not be considered as an NPA, which is April, May, June. It will not be looked into seriously, but the interest will still accrue, is what RBI has said. Similarly, if I am an entity who has borrowed not from a bank, but have gone for a funding from a company, another company has given a corporate deposit, then the entity who has given the deposit has to look into the recoverability of the loan, recoverability of the interest, how it would affect them, whether the recognition of income as per AS 9 is to be considered. All these challenges are to be faced. The next major question that we may have to look into with the clients is about the liquidity of the entity. This is going to be a huge issue, especially for smaller organizations which are not in the profit zone. They are in the loss, or they're trying to break even. They've been struggling for the last few years. So liquidity crunch, is it forcing them to take some harsh measures? Whether the going concern is going to be affected, what all the potential impacts, how they foresee, because they would have said, I have a possible customer who is going to give me an order from July to December, for which I will start slowly preparing myself. Now, whether that contract will still be valid, whether the customer is still interested in taking this material, so many questions have to be answered. If such kind of situations are there, then we may have to look at what could be the impact, how the impact could be felt, what are the key assumptions made by the organization, ensuring that these assumptions are valid, whether we need to test it with someone else or not is going to be a huge issue. So that is again a huge point of concern for auditors like us. We may have to take very detailed analysis from the management to ensure that we comply with the requirements. The next few points which may have to be looked into, one is credit downgrading. Yes, RBI has come up with the notification, as I told you, giving some benefits, saying that it may not be downgraded and other things. But whether that alone is going to give the impact, just 3 months is the benefit that they have given. We don't know whether it's going to be extended or not. If it is not extended and the company is not having liquidity to make the payments, then obviously the downgrading and other things will come. So what are all the negative impacts it's facing? How is it going to impact the organization is something that we may have to look into. And the next thing is about the management. Okay. One question which has come is whether MGD 14 for February be filed without making payment of penalty. As of now, it looks like possibly yes. It says no additional fee from April to September. That's how it's been said. You should, I think, even if you try filing it right now, I think they will, if at all they charge an additional fee, they will charge it only till 31st of March. Additional fee after that will not be applicable. Thank you so much. So
one more question is there.
Yes, sir.
This is if we don't visit branch, should we disclose that in the audit report as branches not visit?
If you don't visit the branch, if it's a significant part of your item and you're not satisfied with your documentation which is available, I definitely feel we might have to do it. We definitely need to look into that as an option. We may have to put it in our report. Already we have a clause in our audit report saying that whether we have visited all the branches, for the branches not visited by us, how we are looking at it, how comfortable are we? We are already reporting on that in our audit report. Now we may have to look at giving our opinion in that paragraph saying that I have not visited because of the travel restrictions, and because of which to that extent the numbers are not true and fair. Whatever it is, you may have to give a disclaimer if needed in that scenario. So going forward, The next point that I have put across is, has the management identified any risks and uncertainties? Obviously, I don't think any one of us will be able to identify what's going to happen the next few days or few months. Okay. Now that WHO in one of their latest publications are saying that we are not going, COVID may be a part and parcel of us. We may have to sit and start living with COVID 2019 is what they're trying to say. If that being the scenario, how far our risks we can foresee, how far the uncertainties we can foresee is something a huge challenge. But we must take steps, or we must at least ask the management to see either they are foreseeing any other difficulty other than what we thought the management might be looking into. Okay, probably, for example, as of now, so no such notification is there, but probably government might all of a sudden might come up and say no more Chinese products into India. So that means to say persons who are completely relied on some Chinese products for the imports for their manufacture, if they don't have an alternate solution, then they may have to look at closing down the business. They will be, the going concern may be very strongly affected because of this. So that being the case, we have to look at that as an option. So that is what I try to highlight here. Has the organization thought about such things? What are all the possible risks they are already facing? What are all the uncertainties they could face? How it will affect them? Is it going to be significant enough? What are all the plans they have in mind to ensure that they at least feel that these are all could be the way they could approach if the situation hits? If the Chinese product is not available, I feel the local product could be used, especially with the PM saying, let's make local vocal. We may have to start looking at this also as an option. We may have to look at how people are looking at various opportunities which is available, various risks which is available, whether they are changing the risks into rewards. All this has to be looked into. Then as a different kind of an pandemic which has happened to us right now, there is a good possibility of fraud also to have happened. Okay, many organizations were under complete lockdown. They have not even gone near the factory for 40 days or so. There is a good possibility there's a pilferage in their factory. There's a theft, even though they might have strict security measures and other things. They may have to reduce their number of security because of COVID reasons. So there could be a theft which has happened, which may lead to a fraud, or there could be some financial frauds which has happened at a distinct location. Various, like Roy sir was asking, we are not able to go to a branch. We don't know what's happened in the branch. There could have been a fraud which has happened. We don't know. The branch manager there is certifying that the cash balance is so and so. We are relying on it, but he could have taken the cash balance and gone home. How do we know? So challenge in terms of frauds because of the restrictions we have in doing audit is also going to be a huge activity. So we must ask the management what are all the additional measures they have taken to ensure that any possible frauds has been mitigated. Okay, so that is something that we may have to look into. The last point here that I have put across is impact of reporting timelines. Because of timelines, one question which has come, any extension in filing annual returns and balance sheet as an IT act? As of now, till yesterday, no. Anyway, we have time after 30th of September only, we have to file the balance sheet P&L. We hope by then COVID would have been relaxed. If it is not relaxed, I am definitely foreseeing that the MCA will come up with or the finance minister will come up with a notification saying that there is an extension of conducting AGM or the fee or the AOC 4 extension. Anyway, irrespective of whether COVID or not, they have been extending. This COVID will be additional reason for us to ask for more time. That is all. So that being the case, definitely we must have an extension coming in is what I foresee. So let's look at that. So going into this reporting timelines, because of reporting timelines, are we forcing ourselves to not to do something, or is the management forcing itself of not doing a particular activity? Is something that we may have to look at. For example, 30th of June is the due date for all listed companies. Till 17th of May, the lockdown is not fully lifted. After 17th of May also, we don't know how far the relaxations are going to come in. So if I'm an entity who is having multiple locations, getting data from the various locations will be a challenge. How am I going to consolidate this data? Even if I'm saying I'm in a very strong ERP like an SAP or whatever be the structure, someone has to be sitting in that office to upload certain information by which I can export it, extract it here for me to do the assignment. But if that is not going to happen, how am I going to satisfy the closure? If the management is foreseeing such kind of difficulty, then how are they going to stick to the timelines? If they are not going, if they very strongly feel, yes, we may not be able to close down the audit by 30th of June, then upfront they should start writing to SEBI. As of now, there's no extension. So if they're very clear, if nothing comes up in next 1 week or 15 days, they should very clearly start writing to SEBI saying that it's not possible for us to conduct the board meeting by end of June. We will be needing another 15 days or 1 month or whatever be the timeline to conduct the board meeting for us to close. We must start looking at that. So reporting timelines, is it forcing the management not to do an activity? Say for example, they might have been looking at physical verification towards the end of March. Okay, now they have not done a physical verification. Will that cause a significant data damage for us? Okay, even now they have not been able to do a physical verification. So how am I able to confirm the value which is there in the books? Okay, so these kind of challenges will be there. So timelines has to be revisited. If timelines is forcing the company to take harsh decisions, whether they should take that decision or whether they should go to SEBI or ROC for extension may have to be looked into. Anyway, ROC has given us time right now. Anyway, we have time till 30th of September for AGM. The first timeline that we may have to look at is 30th of June for all listed organizations. So looking at all these points, how audit will change for us in the current year? First and foremost, the main activity we as auditors may have to check or we as auditors may have to test is the going concern. Okay, especially for organizations which were already under loss making for last few years, or newly started organizations which were trying to stabilize themselves in the last 1 or 2 years, trying to break even or still having losses, but they're trying to manage structures. Those kind of organizations, whether going concern is going to be affected. Our primary documentation in the current year may be for these organizations going concern documentation. How we as auditors are satisfied that the reply given by the management for stating that the organization is still a going concern is going to be a very important documentation to ensure that our reporting is not disturbed. Because we in our report very clearly say, looking at the organization on a going concern terms, this is what is true and fair is what we have been always reporting. So if the going concern itself is going to be affected, then we may have to definitely look at how the organization is going to give us the comfort zone of going concern. Okay, some serious events we have to look at. For example, events and contingencies and events after the balance sheet date also may have to be looked into, not only from 17th or 18th of March till 31st of March, we have to look into post that also. Subsequently also nothing has happened for 40 days or nothing has happened means whether the management feels, yes, they will be able to revive from this. No, we will not be able to revive. We have to depend on some other terms of survival only. Like yesterday, MSME, so many loans and other waivers and reliefs were given. Whether such kind of waivers, reliefs and all should be looked into is what we have to look at. Okay, so that is something that we may have to look into. The next important thing as auditors you may have to do is inventory measurement, especially for items which are perishable, which are damageable, which is in a WIP stage, which is not usable, if it's not touched upon for a particular period of time. How do you determine what is going to be the net realizable value? Okay, example of a mobile phone. I'm a mobile phone manufacturer. As on 31st of March, I have a significant stock of mobile phones. So my cost, it's a luxury based brand. Let's assume my cost is something around 35,000 to 50,000 is the brand width I'm planning to sell. Whether anyone will come up and buy it at that brand width even now. If let's assume my cost is around 40,000 and my margin is say that it's not that way, but let's assume my margin is only 5,000 rupees and 45,000 was my sale value. Whether 45,000 is still considered as an NRV. People will obviously not be looking to replace mobiles, even if it's damaged completely. If they're able to touch the screen and say hello, they'll be satisfied with the mobile for next 5 months. So that being the case, the mobile phone manufacturer may and the dealers and all will have a very big challenge in selling the product. So there will be a huge discounts and other things which may have to be thrown into. So what are all the factors which may have to be looked into for valuation of inventory as on 31st of March to determine the cost versus NRV is going to be something that we may have to look into. Okay, so that is going to be a huge factor for us. Inventory measurement, how the management still feels cost is lower than the NRV, or if the NRV is lower, what is the documentation we have? We may be stepping in for audit only say by June or so. So if that being the case, have they taken any steps of sale subsequently? Is there any realized value of the closing stock? Can we take that as an ideal proof to say, yes, it is cost is lower? How we are going to look at it is going to be a challenge. The next is about impairment of non-financial assets. I've used the Ind AS term, but all said and done, many companies now feel that trade receivables is going to be a challenge. Auditors are feeling that trade receivables is going to be a challenge. With all the extension of due dates, how we are going to plan ourselves is still a number game that we have to play with. Similarly, any organizations, they will have to look at, I was already giving 90 days credit, whether 90 days credit is still logical right now. Should I extend it from 90 to 180, 90 to 150 or 160 is something they may be looking at. So that being the case, should we create provisions, possibility of write-offs of loans, possibility of non-recognition of interest income from loans, all this will be a challenge for us. So looking at these items, whether we have to take some write-off of provisions and other things will be looked into. One definite thing that we all have to look into is looking at investments and its valuation. Whether cost is still considered as a disclosable item, we have to look into. We all know how stock markets crashed drastically. It's still trying to pull itself up to some survival levels. but we don't know whether that will happen or not. But still trying. It's been crashed drastically. If it's a current investment held by the management, then very clearly cost or the market value has to be recognized as provision in the books. We may have to create a provision. Some companies, we may even have to look at permanent diminution for long-term assets. We don't know. All those kind of structuring, investment, fair valuation of investments, huge challenge for all of us. Please ensure all the related documentation in terms of accounting standards, corresponding impacts in terms of income tax, all that have been complied with. Okay, because this is going to be one huge area for us to look into. The next point area that ICAI also throws out is on revenue recognition. Okay, again, revenue, how far it's possible, feasible to recognize, do the measurability of the revenue. All this has to be looked into. That is some challenge that we may have to be facing with. Some challenges that we may be facing with. For example, some may be an FOR destination case. I might have manufactured everything, kept it on 17th of March. Kerala slowly started going into lockdown phase. So I'm not able to dispatch the goods. I thought Kerala will ease out, central government will ease out something. So by March 31st, I'll push out something. So should I still recognize the revenue if it's an FOR destination case? Answer is no. So technically speaking, all these are points which may have to look into when it comes to revenue recognition, whether the recoverability, collectability, recognition standards are to be revisited. The next thing is about government grants, which we have been listening to so much of finance minister's speech, asking us, telling us what are all the relief measures they are planning to give. So much 20,000 crores for MSME loans, this, that, and all. How far it's going to use, how far it's going to be beneficial. All those recognition, how the grant has to be recognized next year has to be looked into. All this will be a challenge for us when it comes to government grants also. The next area could be provision contingent liabilities. I've been talking about areas where there is a possibility of creation of provision, how the management is looking into the loss, the probable recognition of loss. That is something which we have to look into. If not, as on 31st of March, there's a contingent liability which may have to be created. They foresee a possible outflow of cash. Then that also has to be revisited. Contingent liability disclosures have to come in. The next thing is about deferred tax, is what I've mentioned. Especially where you have created deferred tax asset on brought forward losses. Whether that will still be possible, whether the entity will still be possible to meet the timelines within 8 years, they will be able to reverse the loss to a profitable situation. Should we create a deferred tax asset? Will it still be a timing difference? We have to test. So significant activity in those costs also will be there. Deferred tax. The next is on borrowing cost. When we read borrowing cost standards, they say if there's a suspension of activity, then the interest that has to be capitalized should also be suspended. We cannot capitalize the interest. That's how it's been worded. So we have to look into for ongoing projects, how to do, what has to be done. All that has to be looked into. Borrowing costs also will have an impact. I've also read that deferred AS15, when it comes to deferred benefits plans, when we have taken shelter of, say, investing into any other entity, or we have taken a policy, who in turn are investing into many central government, state government bonds and other things, whether there is a possible devaluation of those plan assets. If the devaluation comes in, then my liability versus my asset gap will widen. If that gap widens, then to that extent, we may have to create any provision. Okay, next question which has been asked is, should I create a provision for interest for non-payment of MSME if it's beyond 45 days? Answer is yes. There is no other option. Government has always been emphasizing that the payment to MSME has to happen. There is no relief or there is no change in MSME Act so far. So I personally feel yes, we may have to create a provision. We may have to disallow that provision under Income Tax Act. All this will have to happen. Yes, ma'am, we may have to do it. Okay, that is going to happen is what I also feel. Then going forward, devaluation of assets. Because of devaluation of assets, your gap between your obligation, present value of obligation, and the planned value of assets may widen. If it widens, then how are you going to address it? Then provision creation to that extent will also come in. So these are challenges which are going to be there. One definite challenge that we will face or we may have to look at is physical verification of inventory. Auditing standards have made it mandatory that the auditor must be present in terms of physical verification of the organization. If an organization is doing physical verification, we must be physically present at that point of time. Now, in the present scenario, we may not be present. So how is physical verification, whether it's going to happen or not, how that is going to impact the closing stock? I spoke about it when I was talking about inventory valuation. And we as auditors, how are we going to document it? The standard obviously gives us a method by which we are saying subsequently, if you have visited, we can backward. If that is possible right now, how are we going to do it? If it is not possible right now, then what are the challenges that we are going to face? How we are going to document it? Whether we're going to say the measurement is disturbed to that extent, or we are not able to give a correct picture, or we are going to give it like a disclaimer, or are we going to mention as an emphasis matter paragraph? How we are going to address this scenario is going to be a huge challenge. Yeah. So considering these points, the next things that we must ensure in our terms of audit. As I told you, we may not be visiting the branch, we may not be visiting the place, client's place also. Audit documentation, how strong is it? In many scenarios, are we going to use the work of experts to satisfy that this is still valuable? This is still going to, this evidence is still worthwhile for us to go with. It's something that we may seriously have to look into. With the audit evidences, if it is not received, or if it's received and there are difficulties, there are issues in it, how we are going to communicate it to the management in terms of written representations, how far that written representations is going to save us from our responsibility is definitely going to be a challenge. So we may have to seriously look at our recasting our written representation. If it is not possible, we must definitely say it's not possible. This is not done. We are not sure. We may have to put an emphasis matter paragraph stating that this was not done. And this is what the management feels. We are going with the management's comment. These kind of things will come in. That's where audit opinion will also change. Inadequate disclosures, I've mentioned about that. Your audit opinion will also change to that extent, whether we are going to still give a clean report, whether we are going to give a modified report, how we are going to give it. We have to definitely start addressing, start thinking right now. Plan your audits, start determining what are all the risk areas that you feel. If it's already a client you have visited frequently, last year you have visited, or interim audit you have already visited, done some analysis, you feel these are the key areas which you may have to take it up with the management. Please put it out to them very clearly. Check whether they're able to give you substantial evidences to satisfy. If that is not there, then we may, for the first time, other than for listed companies, for which we gave key audit matters CAM last year, CAM may be required by us to be used in most of our audit reports this year, especially in what the ICAI had given in a guidance note has very clearly said, if you're not able to do an activity and you still feel, or this is the restricted scope activity you have done, based on which you're satisfied yourself and you feel that this is, and you're still giving a true and fair view opinion, then you must mention it in your CAM. Okay, so CAM may be the way out this year. Most of the items wherein we are not getting satisfied, wherein we are not having proper documentation, but we still feel, yes, the management is giving us the best which is possible and we are still feeling it is true and fair, then CAM is our way out. We may have to mention what was the risk, how it was mitigated, or what are the steps taken by us as auditors to mitigate it. So that is something that is very, very important that we have to look into. Obviously, every organization would have some impact because of COVID 2019. That must be reported either in the board's report. It will form part of board's report. It will form part of various reports that they are circulating. It will be forcefully part of the notes forming part of financial statements also. We may have to look at that. If at all we feel that we may have to refer a particular note number in a key in an audit matter paragraph or an emphasis paragraph, we may have to look at it. So, or other information which may have to give in terms of notes forming part of financial statements may have to be looked into. The last point I have told is we have to revisit the internal financial controls. I spoke about what are how the possible risks in terms of fraud and other activity which has happened. So here also it is still there, whether the IFC still holds good, whether we may have to revisit the IFC, internal financial control, for the purpose of financial reporting, may have to be tested by us. More or less, we will be forced to take a lot of external confirmations this time, especially when it comes to debtors, recoverability of debtors, the discounts which is coming in, or we may have to take external confirmation. We may ask the management to do an audit, conduct and stock audit from a third-party chartered accountant in a different location. Ask them to give that, ask them to report directly to us as a confirmation about the stock value. So external confirmations may play a huge role in this year's audit. We may have to look at what are all the possible ways we have to look at external confirmations. Next thing is about the risks of fraud. I've been speaking about it for quite some time. So how it was mitigated, how the management has ensured that there is no or the risks of fraud was reasonably mitigated by it. All this, we may need a detailed discussion. We may have to communicate all this to our clients, put it out upfront in your engagement letter itself, saying these are all the difficulties of the engagement letter has already gone, and along with the AGM appointment of our engagement letter has already gone. Then we may have to start communicating with our clients, put all the areas which we feel are the challenges which we will feel as auditors, how we feel, how or what are the things that we are looking from them to mitigate our risks. All this is going to be a challenge. We may have to discuss it completely with the client before even taking up the assignment. So this are all the risks or the things that we have to take care when it comes to audit 2020. I'll go forward with the last wing of my presentation, which is relating to CAB 2020, Companies Amendment Bill 2020. Only a few slides are there, so we'll try to close it out quickly. Major amendment in Companies Amendment Bill 2020 again was with relating to CSR. and very favorable amendment has come in. Okay, 2 amendments which came in, which is very strongly or very much into favorable situation for companies are: first, transaction. If your CSR contribution is less than 50 lakhs, then you need not constitute a CSR committee. The board of directors itself can take a decision as to what are all the projects they are going to invest, and they can take the investment through them. No need to have CSR committee, no need to have CSR meeting, no need to pay sitting fees for CSR meeting. All these things can be avoided. Okay, so those kind of structures have been moved out. Okay, very logical decision. They introduced a new subsection, or new section 135(9), which makes it very clear, saying that no need for CSR committee. The other important amendment which came in, and again a favorable amendment, is that if a company did just beyond too much in that year, then what do they do? For example, I was supposed to say spend 50 crores towards CSR, but I ultimately ended up spending 52 crores in CSR. Okay, I've gone beyond it. So is there no benefit for me? Was the questions which many people posted. So now the amendment in section 135(5) says that the 2 crores that you have excess spent in the current year can be considered as CSR expenditure for the next year. If next year also you are having CSR expenditure, this will be carried forward to the next year, and you will assume that next year you have already spent 2 crores and the differential value only you have to spend. Okay, so that is the amendment which has come in. 2 very logical amendments in CSR. And this, the first slide was on this only. Amendment in Companies Act 2019, Amendment Act 2019, with related to CSR, imprisoning the CSR committee members and other officials. Now they have relaxed that. Furthermore, the value from 50,000 to 25 lakhs or 5 lakhs, 50,000 to 5 lakhs has now been relaxed. Now they have given a different schedule. They have said if you have not spent the value, then you have to spend at least 10% value, or 1/10 value will be the value which has to be, which will be the penalty for officers. Like that, or if your unspent value is say 2 crores, then yeah, twice will be the value of penalty. Those kind of structures is what they have mentioned in the present amendment bill. Okay, so that again is a benefit which will come in for people who are into CSR. Next few amendments which came in is they are trying to dilute the word listed company. Earlier, any kind of security which was listed was considered as listed company. For example, if the debentures are listed, you will still be considered as listed company for the purpose of Companies Act. Now this bill is trying to remove off all those kind of cases. It's saying that only specified class of securities will be given, predominantly it will be shares. If your shares are listed alone, then you will be considered as a listed company. Otherwise, you may not be considered as a listed company. They are planning to change the definition. The next thing that they are changing, again, is a welcome change, is remuneration to non-executive directors. We were always confused. There are certain non-executive directors who are playing a very significant role for the board in taking some valid decisions for going forward and all. How to remunerate them, whether commission is the only way out, how to go forward was a challenge that we were looking at. Now 197(3) comes up with an amendment. It says you can still go forward and pay remuneration. If you are a company who has a restriction in paying the remuneration, then you can look at that value, total value, and still go ahead and pay remuneration to non-executive directors. Again, this is a welcome change which has come in. The next change which has come in is with relating to unlisted public companies. Again, a challenge which has been posted before us. They have said there is a chance, or for certain class of companies, we may ask limited review, or they have not said limited review. They have said some periodical statements may be called for from the unlisted public companies. They have not mentioned as to what and how and all. They have said they may have to require to prepare a periodical statement. It may need to be obtained. It may need to be reviewed by the board. A limited review also possible by the auditors. It may have to be circulated, is what they have told. So this is an amendment which was brought under section 129. That is something all public limited companies may need to look into. We have no such, again, we have to wait for the notification to see to whom all it's applicable once the bill becomes the act. Other smaller changes which came in is notice period for reduced now to for furtherance of issue of share capital. Now it's 15 days or such lesser days as may be prescribed is what they have said. It was earlier 30 days was there. Now they have reduced the timeline. Similarly, documents to be filed with ROC, there are amendments which has been brought in under section 403, wherein they are saying that if it is not filed, then there could be severe penalty which is imposed on the person who has not filed the forms. Okay, so that is something which is to be looked into. Then the next amendment is there is a relaxation which is being proposed for companies in India to list itself outside India. As of now, the bill empowers the central government to allow certain classes of companies to list itself directly outside India, and we have to wait for who are the entities and how it's going to be worded. Instead of going through the detailed route, they are going to give some I won't say a shortcut, as limited procedure wherein they may have, wherein we can list themselves in foreign organizations. The next thing is about beneficial shareholders. Again, separate register maintenance and other things. They are looking to reduce the documentation requirements and other activity when it comes to beneficial holders. So that also comes into picture. Ratification of name by use of trademark. For example, there was already existing trademark. Without knowing it, I have already applied for it, and ROC by oversight has issued that name to us as a company name. What is the process to rectify, and within the time frame to be rectification or all? They have changed from 6 months to 3 months and all those kind of structures. So that again has been an amendment which came in. Other than this, there are a lot of changes which came up with regard to winding up of companies and NCLT by proposing new benches, where all they're going to do, all those kind of structures have been made. These are to specify some in, to discuss some of the major amendments. The last part of the presentation where the major amendments came in is one very good thing that they have done is they have removed a lot of imprisonment as a penalty prosecution in many sections. That is a very welcome move. Like I told you, for CSR and all, they were under Companies Act 2019. They had proposed imprisonment for directors and all officers. That and all, many sections like that, they have removed the imprisonment as a clause. Like Companies Act 2019, they have reclassified a lot of fines into penalty. So again, because of this structure, the way we look at the filing of forms and other things also will undergo a change. Now the penalty is the fine was say 50,000 to 5 lakh. Now they say a fine of 50,000 rupees on the per day fine. If it's a continuing default, per day fine of 500 rupees. So we know the quantum of hit very clearly if there's no continuous default. So those kind of things has happened. Many sections they have reduced the penalty value. It was 5 lakhs and all, they have reduced it to 50,000. A lot of changes has been made in terms of restructuring of penalty in many sections. And the last provision which came in, which was introduced here is introduction of producer company. So far, producer company was there only under the 1956 Act. even if you had to form a producer company post 2013 Act, you had to go to 1956 Act to form a producer company. They are introducing producer company with some small modifications with 1956 Act under Companies Act 2013 through Companies Amendment Bill 2020. So these are all the areas which I wanted to cover. I am open for any questions which I have not addressed so far. So yes, there is also one. I mean, it's a very delayed reply from my end. The FM speech has started. Is what they say at 4:05 or 4:10.
There was one question.
Hi, sir.
Yeah, some input on fresh startup scheme, especially on matter where the order passed by ROC. But otherwise,
Fresh startup scheme, I think if you have looked at Sean's presentation the other day, it was very good. Then I think there's an FAQ also which has come in. I'm sorry, I'm not able to explain more on the FAQ, which I have not read on that right now. But there is an FAQ which has been issued. MCA website itself has that FAQ which has been placed. Any doubts on that can be addressed in that FAQ is what I'm told. More than that, I'm not able to comment on it right now.
Nobody has got any other queries? Any queries?
So I take this opportunity again to thank Roy sir, Joe sir, to giving me an opportunity to present my first webinar on Companies Act. So thank you so much. Over to Roy sir right now.
I feel that it was a good session. I think just bringing before everyone the important amendments as well as the COVID-related audit procedures or requirements which we should taken care of. I think it's something which is very useful for all of us. We have, but I think today we were having one problem. I think since the bank audit is going on, many of our friends are not in session. That was one of the problem we were facing earlier. But even then, we thought of going ahead with this program. But it is a really good attendance. I think hope everyone had a nice time here. Unfortunately, at the same time, 4 o'clock, Finance Minister came into line with
any updates that you have to give us, sir?
I think
anyone has updates?
He's concentrating on, I think, on migrant laborers, farm sector, and small shopkeepers and all. I think those things are concentrating on. Yes. And big amounts has been set apart for farm sector and all. I think particularly for migrants, I think next 2 months grains, I think free distribution. I think all those things are coming up.
Okay.
Nothing more. I think anyway, it was a good effort. I think we must thank you for your taking all these efforts to be here and doing this wonderful session. Over to Jos for the final vote of thanks. Jos. Unmute Jos. Unmute Jos. Jos, we are.
Unmute, sir. Unmute.
Yes. Okay. Thank you, Roy sir, and thank you, CA.Rengarajan, today's speaker, for that marvelous presentation on the Companies Act latest amendments, COVID requirements, Companies Amendment Bill 2020, and for that wonderful presentation. Also, we really, it is very helpful for all of us here. And on behalf of our managing committee of Ernakulam branch of our institute and all the participants here, I extend a sincere gratitude to you, CA.Rengarajan. Thank you very much.
Thank you. Thank you so much.
Also, I thank all the participants here in Zoom as well as YouTube for the this interactive session. Thank you very much for that. And there is an announcement. our institute branch. Our branch is going to commence a CA Foundation online course for the students on 25th May. This will be for 4 months duration, and you can inform your students or the interested candidates for this online course. So with that, today we are winding up this webinar. Thank you once again, all of you. Thank you very much.
Thanks. Thanks.